These are the physics-based sentiment forecasts for the U.S. stock market using data as of March 7th, 2025. Our report has 3 figures, and this video focuses on figures 1 and 3. See the videos and web pages linked on each page of the report for background information on the figures. Our 3-week forecasts call for long-term physics-based sentiment to be 3, which means moderately optimistic, then changing to a 4, most optimistic. Short-term physics-based sentiment to be pessimistic. There are no flashes of sentiment within this forecast horizon. Our forecast for U.S. stock market price momentum, as measured by the 14-week RSI, is for it to be trending lower, stabilizing at the end of March. Implied economics-based sentiment registers as meaningfully negative, which indicates that investors have a negative view of economic and market conditions. In summary, recent stock market declines have been consistent with our sentiment forecasts. We expect the stock market to be vulnerable to declines for another week or so. The market will likely become more resilient later in March when investors become more naturally optimistic. Investors have been pessimistic about economic and market conditions for several weeks, as shown in Figure 3. If it continues, this condition will amplify price declines and dampen price recoveries. The lower panel of Figure 1 shows the physics-based sentiment drivers, indicating the naturally occurring shifts in investor sentiment over the last 52 weeks and the next 3 weeks. Physics-based drivers explain a large portion of stock market volatility, and we can create reliable forecasts for them several months in advance. The upper panel displays the price of an ETF tracking the S&P 500 Equal Weight Index, shown as a dark blue line, along with our Market Resilience Indexes, or MRI. The MRI are based on return acceleration and show the herding behavior of investors as they respond to physics-induced sentiment shifts and all other economic and market factors. They highlight major and minor market inflection points. The short-term driver shown in Figure 1 indicates naturally occurring pessimism through the end of March. The long-term driver indicates an important shift at the end of the month to its highest level of optimism with a reading of most optimistic. There is also a minor flash of optimism in the second half of the month, which may reinforce a growing optimistic view. As noted in our explanatory notes and videos, the forecasts are not always accurate to the week. The macro and micro market resilience indexes shown in Figure 1 do not yet indicate strong negative trends. The macro MRI is at a relatively high level of 68, and the micro MRI is at a moderate level of 46 on a scale of 0 to 100. Both can move meaningfully lower from these levels and still be within their normal ranges. In Figure 3, the upper portion of the figure shows market price as a dark blue line and the predicted price momentum as the solid red line. The solid red line shows the predicted price momentum moving lower and then stabilizing at the end of March. Figure 3 also shows the smoothed excess RSI as the light green line representing the implied economics-based sentiment. This is an important indicator of investor sentiment regarding factors other than physics-induced optimism and pessimism. The factors can include economic, valuation, political, and other considerations. A meaningfully negative reading highlights the potential for future market declines even when the market moves higher. A meaningfully positive reading can mitigate future losses. Implied economics-based sentiment is currently below the neutral level, shown as the dashed green line, indicating meaningfully negative sentiment related to economic and market factors. This condition began at the end of January 2025 and is likely to continue over the next few weeks, even if the stock market moves higher. Should this condition continue, it will amplify price declines and dampen price recoveries. Contact me with any questions. Thank you for watching.